All right, Blake, and yeah, get active, learn, and what an opportunity to trade an alien invasion. So it's going to be historic, Jim. I know. I'm surprised the VIX. I mean, I've been around a while, Jim, and I've never had this chance to trade an alien melee like they say is going to happen here. Is the market pretty complacent about this invasion?
Can you hear me, Dale?
Yeah, I got you, buddy.
Good morning, Coach.
Good morning, buddy. How are you? It's pretty
Al-
crazy out there.
Alien
Huh?
invasions.
Yeah, I
War.
mean, I Vic seems very complacent about these drones.
Well, I guess the drones just haven't shown up in price action yet.
Yeah,
Um,
yeah, yeah,
you know,
that's right.
I haven't watched the show, and I don't even know if it's still on. They used to have the shows where the teams built robots, battle bots.
Oh yeah, yeah.
And I actually think that there's a show someplace where they basically are racing drones or doing drone battles. I don't know.
Huh, yeah,
Drones are not a new thing, but it certainly seems like things have escalated in their applications and presence.
yeah,
So
yeah. So
it's
we have the eye in the sky.
the eye in the sky. Okay, now
Mm.
actually, we should check with Blake to see if he knows who had that song, because you and I are old enough to remember the eye in the sky.
Yeah. All right. Yeah.
But
So yeah, it's just, kind of the Rod Serling Twilight Zone episode surreal that we're living in right now,
yeah, yeah.
right? Just
Well,
another
and
thing.
and you probably remember a show that was even creepier called was it One Step Beyond?
Oh yeah, I do. Yeah, I love those shows.
Yeah.
And what a lot of people are just, just saying, well, it's just another thing in the Middle East, but I think there were ancient writers that talked about Damascus will be in ashes. And I think you know what I'm talking about.
Well,
So,
yeah, that's another one that doesn't seem to have shown up in
yeah,
the indices or any of our
look at, yeah,
volatility signs.
it's just going to go, and keep going till it stops, probably exhaustion. So tell me what you're seeing. Smooth sailing, question mark. Okay. All right. I like that question mark.
Well, it's always a question mark with me because you just can't know what you can't see, and none of us can see the future, or at least I can't.
Yeah.
And I haven't found anybody who does it consistently.
All right.
Everybody gets lucky sometimes.
Jim's with an RIA. Take a screenshot so you know how to get a hold of him. I'm a big believer in people diversifying away from themselves. Especially with retirement funds and so forth. So Jim's part of uh, a great team, and I'd be comfortable with his decision-making process. So
Well,
I
thank you,
plugged
Dale.
you.
It's very kind.
So what are we looking at going into year end, my friend?
Well, so let's take a peek. Um, well, yeah, r read this and memorize it. The quiz that comes at the end.
Yeah. Okay.
Um, so
I'd like to change the disclaimer
what's that?
because it's inaccurate. Because past performance is indicative of future results. In most cases, it is.
It's certainly the best clue you've got,
Yeah.
and I have yet to meet anybody who makes an investment with any kind of fund manager or investment advisor who doesn't look at their past
Yeah.
performance and draw some
Right.
conclusions from it.
Yeah.
So,
Anyway.
so here we are.
Okay.
Santa's about to arrive in 2024. This chart looks all the way back to, pre-COVID times.
Yes.
And, um, it looks as though the August VIX spike is in
Yeah.
the rearview mirror. we had some of what I refer to as little echo spikes after that, but
Nothing
um,
much. All the way
nothing
back at the
much.
lows.
Nothing much. Yeah, and getting a little closer, this is with SPX in the top panel and VIX at the bottom
Right.
panel. And, you know, whether we, definitively break to new highs above 6,100 or, I don't know
Mhm.
what's going to happen, but
I
um,
don't think the mix, even if that happens, Jim, I think there's a chance the VIX may hold if we're getting, or even, surprise people and maybe go up
yeah,
during the last phase of this blow off.
right. Yeah. Well, and we've seen that happen before. That's a good point. I mean, if you remember, the first part of 2018, that's exactly what we saw. We saw the S&P and VIX going up together. That's one of the
Yeah.
things that we watch carefully is that correlation of the two.
Will that
Um,
be a tell?
that
When,
certainly that certainly gets my spidey sense tingling.
okay,
Um, you
I
know,
like that.
when we see, if you see VIX go in the same direction as the spies, if you see VVIX go in the same direction as the spies, those correlations, when those correlations get positive, you have to be paying attention.
Okay.
Look, nothing is perfect, right? But, you know, um,
Okay.
give
I
you
know
some
this is
guidance.
I know this is not a vixologist, but maybe you could mentor me on the move index. I
Oh,
know you
Dale.
no, you don't want to
No,
talk about it?
I didn't include it in my slides this morning, but
Okay,
look, we've seen volatility in rates markets that makes, the volatility in the equity markets look really calm.
right.
Um, and, the question becomes, when do rates markets begin to influence equity markets? And,
Yeah.
so I keep track of the move and the move
The
relative
move
to,
is saying no stress. That's what I'm saying. It's saying, isn't
yeah,
that it? It's a measure of stress. But the bonds have sold off almost 10 points
mm,
after that pop from the new Treasury Secretary.
right.
And so I don't know, people are saying this is bullish, and I'm thinking, if the market could break without showing stress, maybe the market's going to keep breaking until stress shows up.
Mm. I see at least as much volatility in the rates markets as we're seeing in the equity markets. And, that's another one where I kind of scratch my head and say, okay, just be vigilant
Okay.
because, the equity markets do pay attention to rates markets. Rates markets, high yield spreads tend to be the canary in the coal mine.
Right.
We're still okay there. Um, but that could change. And I've got my eyes peeled.
Yeah, because if you have yields going up with valuations going up at the same time, the rubber band's being stretched on both sides.
Exactly. Exactly.
All right, I'm not going to interrupt you anymore.
So
Go.
I've got a new one for you. Um, this is something that has just made its debut. I've posted this a few times on Twitter and making its debut on Substack. Um, you know, my I've taken the
Right.
Vixologist and turned it into Vixology on Substack. And right
Okay.
now, as of Friday's close, this composite of indicators that look at the markets through the lens of volatility says, we're in bullish territory, um,
Okay.
67%. And, but the question is, so what? What does all that mean? Why should I care? And so what I thought I might do this morning was take a look back at that July, August timeframe and see what we might have seen back there. So on July 16th, you had S&P making a fresh new high. The market had
Yeah.
been bullish, coming
Right.
out of the April pullback. But what you saw was that this composite indicator, the VIX mix, was only in neutral territory. And if you squint down below, you can see that VIX had actually started to move a little higher over those few
Yeah.
days. You know,
Yeah.
it's not a big move, but again, talk about the correlation between S&P going up and
Yeah.
VIX starting to creep higher. And what that said to me was, it's not as bullish from a volatility perspective as the equity market is. So if we run forward a couple of days, right, the equity market had started to pull back. You had come back, roughly 2% in the S&P. And this composite indicator had moved from, sort of a high neutral spot to 27%, which is, a drop of 31 points in 2 days. That kind of got my attention.
Yeah.
Obviously, VIX had moved up, spies had pulled back, so. And remember, the backdrop on this was, okay, what's going on? Is this, yen Mageddon? Is this the unwind of a dispersion trade? What's happening? People were starting to look around for why the S&P would have pulled back, but not a big deal, but 2% in a couple days is, you're going to pay attention. Um, and I was definitely paying attention because, again, my composite indicator had dropped 30 points and moved from neutral to bearish territory. So then
Okay.
you fast forward a little bit because I remember vividly, we had this little 4-day push higher into the end of July, where the S&P moved itself back up 2% off of that, swing low. Is everything okay again? Well, the VIX mix was saying we're still in bullish territory or bearish territory. So, hold on to your hats. We weren't prepared to buy the reversal. We were still bearish. Again, you never know what's going to happen the next day. We certainly didn't know that, August was going to be greeted the way it rolled out, but, we weren't bullish. Let's put it that way.
Okay.
So let's now drill down inside that composite indicator and look at one of the components. We got more than a dozen separate components that roll up into that composite. If we take one of them, one of the things I look at is the ratio of the midterm VIX futures index and the short-term VIX futures index. Sorry about this. It's moving around on its own. And those are expressed in two ETFs that we can track. VIX-M is the midterm VIX futures. VIXI, also VXX, uses the same index. They're both based on the short-term VIX futures. And what we
Okay.
know is that the front end of the term structure is going to move faster. It's going to rise or fall faster than the middle. So we would expect VIXI to go up and down faster than VIX-M. And if we look at that as a ratio, it might tell us something. And so we track that ratio as part of the VIX mix.
Wow.
And so here's what we saw back, the end of mid-July to the end of July. If we go to that first down day, we saw that ratio go from bullish. Notice that it had been bullish, all through June into the middle of July. And then it had its first crossover on that first down day, July 17th, had a second crossover down on the 20, on the, what day was that? The 24th. We had both of them down. And what's interesting here is that even when the S&P had that rally into the end of the month, we were still underwater on both of these moving average pairs. So, again, nothing's perfect, and I'll demonstrate that in a minute. But, if you were looking at this, that move into the end of July, based on this indicator, was a head fake. And so if you had decided to be short S&Ps or long volatility, you would have had something here to say, hang on, don't close out your position, don't switch up and go the other way. Just be patient.
Be
And that
patient.
patience would have, paid off
Paid.
pretty well.
Patience pays.
So what's interesting is, I think if you talk to a lot of people about August 5th, when, VIX in the morning went up into the 60s, they would have said, hey, I didn't see that coming. Who saw that coming? Nobody saw that coming. How could that happen? Well, um, maybe you couldn't know that that's what it was going to do, but, you might have had some sense that to be leaning bearish as opposed to be leaning bullish.
Yeah, you don't know the magnitude, but you knew the right side to be on.
You never know the magnitude. You never know how far or how fast,
Yeah.
is what I
We
say.
try, we attempt it. We could use fibs. I mean, I'll tell you
Yeah.
what. I mean, I know what I'm looking for when I get into a trade.
Hmm.
Whether you and I'd still agree with you that we never know, but it's still part of my strategy to know when I'm right.
Right.
I'm not going to say if,
Yep.
because the if is I'm stopped out. Okay, but
Right.
when I'm right, I know where the potential of the move is long term.
Exactly.
For me to sit towards those targets, that's a problem because you
Right.
brought up the key word in the business. It's all in our head, and it's a lot about patience, and most people don't have it. That's why there's something called FOMO and
Right.
impulse trading, which are the two
Exactly.
biggest enemies of a trader that will make their account terminal.
Hmm.
Anyway,
So,
oh
so anyway, this
man,
is this is just drilling down on one of the components of, this
yeah,
bigger indicator to show, that you can dial down, and get some information from, and again, this is strictly looking at what's going on in the volatility
hmm,
complex, as I like to call it. This is the comparison of short-term VIX futures, the basically a construction of the first 2 months, and then midterm, which is, fourth, fifth, sixth, and seventh. It's a blend of four different contracts that are
yeah,
sitting behind that VIX M ETF.
yeah,
Now, no single indicator works all the time. So, we come out of that and into October, going into the election, and
yeah,
volatility was telling you to be bearish.
yeah.
And that shouldn't come as a surprise. I mean, that was a huge
Uncertainty,
event.
yeah,
That was a huge event. We had no idea what was going to happen, who's going to win. It's a toss up. If Trump loses, we're going to have, civil unrest across the
right,
country.
right,
People were definitely getting hedged up. And, that showed up as a bearish signal going into the election, um, and which obviously reversed quickly. But, this,
yep.
this is to say, you can like a particular indicator, but you can't trust it to be right all the time. And certainly, you need to look at other things to either confirm or deny positioning that might be based on one indicator.
Confluence.
Hmm.
Jim looks for confluence. Okay.
So, interesting that pre-election event risk. If I look, get back up to the aggregate, composite on October 31st, going into that election, the VIX mix said, we're 13%. We are bearish. So, um, again, was this something to be acted on? Not necessarily. It's something to be aware of. Every trader has the things that they trade, whether it's Forex, rates, equities, whatever it might be. What this would say is the sentiment around you, whatever you're doing, the sentiment around you is bearish. So just, keep that in mind. Now that may mean, hey, I think that the event's a nothing burger, and so I'm going to take advantage of this bearishness and put on some bullish trades because once the election's over, we're going to head the other direction.
Yeah.
And some people no doubt did that. You just have to act in an informed context.
Okay.
So, back to where we left off on Friday, we've got S&Ps hovering up around those all-time highs, and this morning looks healthy last time I checked.
Yeah.
We've got VIX settled down below 15. And my friend Dean Kernot says, nothing bad happens with the VIX below 15. And
Like that.
historically, he has been right about that. But it doesn't mean it's going to stay below 15. And, we're going to keep our eyes open. We've got VIX mix in bullish territory, but it's not as bullish as it might be. So again, there's a mix of signals in here, some of which are more bullish than others. In the aggregate, we're in the green. And I would say that while we're in the green, you don't expect anything bad to happen. It's, these things don't just happen overnight, as I tried to demonstrate with August 5th.
Okay.
There was time
It's a
to,
process.
it is a process. Almost every time I could go back to, every major volatility event that we've seen in the last 10 years and show how the sentiment was changing before the what hit the fan.
Yeah.
You didn't have to be blindsided.
Okay. Great presentation again, Jim.
So that's our story.
Yeah. Well, you could tell all the work that Jim puts into the VIX. How many RIAs even know what the VIX is, right? They may be out on the streets looking for a vixen, but they have, but they have, but they have no idea what the VIX is. So I'm, a money manager with technical skills that could see a market is always better than a salesman. And that's what most of those guys are. They're just asset collectors. Have someone with some market savvy as we enter, uncharted territory and a lot of different things happening, big changes happening. And, Jim, it's good to have you as a watchman for us to let us know when you see things starting to happen. So appreciate your giving spirit of coming here to face and teaching us about what you already know and put in hard work for that knowledge.
Yeah, and anybody who wants to keep track of that, I am now up on Substack. I will
Okay.
be keeping that current. That's
Vixology.
vixology.substack.com.
Okay.
Vixology is like mixology, except we're not
Cocktails.
making liquor cocktails. We're making
All right.
volatility cocktails.
All right. Well, I can't think of a better guy that I would want to pour a shot for. So, Jim, really appreciate you coming here over the years, and I want to wish you and your family a wonderful holiday season.
Thank you, Dale.
Merry Christmas, brother.
My daughter got engaged over the Thanksgiving holiday, and
Oh,
so
wow.
both of my kids are now engaged.
Wow.
So
All right. Well,
it's all good.
congratulations. Yeah.
Thank you, sir.
It'll be grandpa in a year or so.
Well, we have
Grandpa
the
Jim.
Right now we have the Grand Kitten.
Grand.
And the
Yeah,
we,
well,
we, we,
it'll be different. They
my
say being a grandparent is better than being a parent. I've seen
well,
it.
you get to take your revenge on your kids, right?
All right, brother. All right,
Thank
man.
you.
Jim
Thank you,
Carroll,
Coach.
everybody, at Vixologist on X, and check out his Substack. And, if your money manager's not doing a good job, you never know if you have a good one until you compare it to something else. I recommend Jim. All right,
Thank
so
you, Chief.
you're welcome, buddy. And that's a wrap, everyone. You could join the team in 15 minutes on the Morning Edge. Let's have a good week. Keep your powder dry. I think Wednesday is going to be the day to be aggressive. And I'll see you tomorrow for Turnaround Tuesday. Adios, and thanks again, Jim Carroll.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.